So this was the status of the macro economy in July. Bitcoin was appreciating 55%. It was trouncing the NASDAQ and the S&P. Gold was a laggard. Silver was lame. Bonds were losers. The entire industry needs Bitcoin as their ethically sound, economically sound, technically sound foundation if they're to have any future. And I think you guys should be very, very proud of that development. 12 months, what's going on? Bitcoin is still running hard, running harder than it has been, up 61%. The Magnificent Seven and the S&P are underperforming. They're struggling. The tariff wars, the trade wars have been a challenge for them. There's been a general mainstream lagging of confidence, and that's caused a surge in gold. But Bitcoin is running much harder than gold. Real estate soldiers on and bonds continue to fail. Bitcoin's outperforming all asset classes this decade, too.
In mid-2024, Bitcoin stood at a pivotal moment. It had surged over 55% year-to-date, outperforming every major asset class, from the S&P 500 to gold, silver, and sovereign bonds. Institutional capital had cautiously begun returning after the long crypto winter, yet broader conviction remained hesitant. With a market cap just over $1 trillion, less than 0.1% of global wealth, Bitcoin held only a small presence in a financial world worth over $280 trillion. But at BTCPrague 2024, MicroStrategy's executive chairman Michael Saylor delivered a bold thesis. Bitcoin could reach $13 million per coin by absorbing 7% of global assets over the next 2 decades, growing annually at 29%. At the time, many dismissed his projection as wildly optimistic. But less than a year later, parts of that vision began materializing. Bitcoin had climbed over 60%, not only dominating in the past year but also outperforming every major asset class over the last decade. Meanwhile, confidence in traditional assets, bonds, real estate, and even big tech waned under pressure from rising tariffs, monetary uncertainty, and growing de-dollarization. Bitcoin, once seen as a speculative gamble, had transformed into a serious financial instrument. Wall Street analysts now issue price targets, and for the first time ever, a sitting U.S. administration declared its strategic intent to make America the global leader in Bitcoin. Now, in 2025, Michael Saylor returns to BTCPrague, not to offer a prediction, but to reflect on a rapidly unfolding reality. In his keynote, he outlines the macroeconomic forces fueling Bitcoin's institutional surge, the tidal wave of capital flowing into the space, and how the race has begun, not just for corporations, but for entire nations to accumulate Bitcoin. Let's turn to Saylor's latest address to understand how far we've come, what's driving Bitcoin's current trajectory, and what lies ahead in the rise of this trillion-dollar monetary network.
For those of you who were in Nashville last July, I presented a few slides, and I want to take you back 11 months. So this was the status of the macro economy in July. Bitcoin was appreciating 55%. It was trouncing the NASDAQ and the S&P. Gold was a laggard. Silver was lame. Bonds were losers. Bitcoin was a $1 trillion asset class. It was just less than 0.1% of the wealth in the world. But we could see that something was going to change. I presented a forecast in July, and I said, I really think my base case is Bitcoin's going to grow 29% a year for the next 21 years. And that's going to cause it to appreciate to $13 million Bitcoin. We had a macro forecast, and that meant that Bitcoin was growing to be 7% of all global assets. And it was growing to be its own asset class. And you can see here, $280 trillion, but the preeminent monetary asset in the world. So all of that was last July. Bitcoin was $65,000. What happened since? 11 months. Okay, this is extraordinary. I was, as Joe said, I was bullish last July. I've always been bullish, but when Bitcoin dipped to $16,000 during crypto winter, I was bullish. But stuff that's happened in the past 11 months has been extraordinary. The White House has embraced Bitcoin. This is an extraordinary development. We didn't anticipate this. We hoped that we would get a favorable administration, and we hope we get support, and we had this inkling, but November 5th brought a sea change in politics, and although we thought we might have a pro-Bitcoin president, we didn't think we'd get a strategic Bitcoin reserve. We didn't think that the president would say, America will be the Bitcoin superpower of the world. This is an amazing development.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
The new administration, J.D. Vance, pro-Bitcoin, Robert F. Kennedy, pro-Bitcoin, Tulsi Gabbard, pro-Bitcoin, Kelly Loeffler, pro-Bitcoin, Paul Atkins, pro-Bitcoin, Brian Kentez, pro-Bitcoin, Scott Bessent, pro-Bitcoin, David Sachs, a new position, cabinet-level position, not just pro-Bitcoin, a cabinet member that would go on television and say Bitcoin is the one decentralized crypto network in the world. It is special. It is the digital commodity, right? The one thing that we've all known, but a cabinet member in the United States government says it. He said it in March of this year. Howard Lutnick, pro-Bitcoin. Kash Patel, pro-Bitcoin. Every one of these cabinet members flipped from 12 months earlier, where there would have been no one that would have been as bullish on Bitcoin as what we saw here. Wall Street embraced Bitcoin. $150 billion of capital, 1.4 million Bitcoin. This entire dynamic started in January of last year, but it accelerated after July. Public companies. My company was the first public company to adopt Bitcoin. People thought we were crazy. I thought we were late. Like some of you, I kept thinking that I got it right in 2013. Like, why didn't I buy in 2013? In 2020, I thought I was late. But what happened next is the second company, the third, then 130. Then companies like Trump Media and GameStop in 21. And now companies are racing to get into the Bitcoin 100. Used to be, we thought, oh, it'd be great. There's 10 Bitcoin companies and 20. Now there's 100. Now there's more than 100. Now we're all going to compete to move up the leaderboard. Yeah, let the games begin. Bitcoin wasn't an institutional asset. It wasn't cool on Wall Street. People thought it might be toxic. Well, now I have a whole set of equity analysts that write research and publish their research to investors, and they put a price target on Bitcoin. So now you have the entire equity capital markets embracing the asset class, writing about it, opining on it. You know, we went from an oddity, tulip bulbs maybe going away, to an entire array of analysts and investment banks starting to have an opinion. And of course, if you look at all the prices up there, their opinion is all positive, it's all bullish. Technology investors have embraced Bitcoin. What you see there is the Bank of America investment analyst equating Bitcoin to something as profound as the light bulb, the Model T, the World Wide Web, right? That's a very important rotation. Bitcoin is a technology. Bitcoin's not a speculation. Bitcoin is not is not an oddity. Bitcoin is not anarchy. Bitcoin is just the next great technology.
What Michael Saylor is describing isn't just excitement, it's the full-scale institutionalization of Bitcoin as a legitimate monetary asset. In less than a year, Bitcoin has shifted from the fringes of finance to the core of global markets and geopolitical strategy. The numbers support this shift. Bitcoin ETFs, once thought unlikely, have now attracted over $200 billion in assets, led by giants like BlackRock, Fidelity, and Franklin Templeton. Nation-states are quietly building reserves, and what was once labeled conspiracy theory is now seen as sound monetary policy in a world grappling with deglobalization and currency fragmentation. This isn't merely momentum, it's structural change. Wall Street isn't asking if Bitcoin belongs in portfolios anymore, but how much exposure is ideal. Some research desks now recommend a 3-5% allocation for institutional investors. Technologically, Bitcoin is evolving beyond speculation. It's now recognized as foundational monetary infrastructure, much like TCP/IP was to the early internet. And like the internet, Bitcoin is beginning to scale monetarily on a global level. Perhaps the most significant shift is in the incentive structure. With improving regulatory clarity, growing political backing, and capital flooding in, major institutions, banks, corporations, pension funds are no longer incentivized to stay on the sidelines. They're incentivized to adopt. What began as a decentralized experiment is fast becoming a geopolitical asset class, one defined not by its volatility but by its systemic importance. Let's turn back to Saylor as he outlines the next phase of Bitcoin's institutional ascent, and why the adoption race isn't theoretical anymore. It's already in motion.
They also recognize it beats the cost of equity. That means that every public company, in theory, should recapitalize on Bitcoin, because when they sell equity, they're actually generating profits. They're creating an accretive transaction for their shareholders, right? The world is waking up to this. You see that hence you see an explosion, in the shares of Metaplanet and Smarter Web and H100 and Blockchain Group, right? This is going to continue. These companies are going to catch fire everywhere in the world, in every capital market, for one simple reason. Investors can see that 56% is more than 13%. It's just that simple. And this is it's a very powerful dynamic. And yet Bitcoin is just 20 basis points of global wealth. So here's an interesting thing. We are now at an inflection point. We have all the information to know Bitcoin is winning, and yet the majority, 99.8% of the capital in the world, still pretends and acts like it isn't. Most is still oblivious. You know something the rest of the world has not yet acknowledged, and yet it couldn't be clearer to all of us in this room. There's a monetary revolution afoot, a revolution in economic thinking. It's spreading everywhere in the world. It's fueled by the digital transformation of the capital markets that you see manifested in all of these companies and all of these securities and all of this Bitcoin activity. And it's going to be accelerated by explosive financial innovation. That innovation is surging now.
What Michael Saylor delivered wasn't just a bullish keynote, it was a roadmap for how global capital is repositioning around a decentralized monetary protocol. Over the past year, Bitcoin has achieved more institutional, regulatory, and political progress than in the previous decade combined. U.S. regulators are greenlighting Bitcoin for banks, ETFs are live, and pro-Bitcoin legislation is advancing at both state and federal levels. Globally, sovereign actors from Bhutan to Brazil are no longer dismissing Bitcoin, they're preparing for a world where it serves as a reserve-grade, non-sovereign asset. For some, it's a hedge against the dollar. For others, a bet on digital sovereignty. Ethereum way, Bitcoin is now being treated as strategic infrastructure, not speculation. Capital markets have responded. Bitcoin is up over 60% year-to-date, with a 5-year average return of 56%, far outpacing gold, real estate, and tech stock. Even more critically, it now exceeds the global cost of equity, estimated at 13%. That's a threshold few assets can cross. For CFOs and corporate treasuries, this changes everything. Traditional assets like real estate, bonds, and even oil now risk diluting shareholder value. Bitcoin, on the other hand, is both liquid and accretive. This shift is fueling the rise of Bitcoin treasury companies like MicroStrategy and Metaplanet, marking the early stages of a larger capital rotation. We are witnessing the beginning of a global monetary repricing. Bitcoin is no longer just an asset class, it's becoming the benchmark, the base layer, the standard. Its decentralization, immutability, and neutrality are now seen as advantages by regulators, corporations, and even government. The world is shifting rapidly, but most still don't see it. That's the opportunity and the asymmetry. Saylor's message at BTCPrague 2025 isn't just a reflection on the past 12 months, it's a window into the next 12 years. The real question now: are you positioning for what's coming, or clinging to a system that's losing trust, yield, and relevance? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.